Imagine a street no longer than a few hundred meters, located at the southern tip of Manhattan, capable of determining the fate of entire nations. This street, stretching from the East River to near Broadway, is called Wall Street. Here, markets are not only managed, but crises are created. Fortunes are drawn, and the world is reshaped in silence. Since the late 18th century, when New York was still small compared to London and Paris, this place began as a simple corner where a limited number of merchants gathered, such as Leonard Bleecker, Jacob Little, and Alexander Hamilton, who laid the foundations of the American financial system by establishing the first national bank and linking the state to financial markets. In 1792, 24 traders gathered under the sycamore tree, known as the buttonwood tree, and signed an agreement to regulate the trading of stocks and bonds, including figures such as Samuel Blodgett and Benjamin Silliman. Their declared goal was to facilitate trade and finance major projects such as ports, ships, and insurance companies, but their undeclared objective was to control the flow of capital within the emerging nation. Over time, as the United States expanded westward and became a major industrial power in the 19th century, Wall Street turned into the heart that pumped money into Andrew Carnegie's steel factories, Cornelius Vanderbilt's railroads, and John Rockefeller's oil empire through Standard Oil. A new class of wealthy elites emerged, known as the robber barons, who did not build their fortunes with their hands, but through monopolies, speculation, and financial contracts. Behind this rapid growth, greed quietly expanded until it became the main engine of the market, surpassing moral and social considerations. In the 1920s, bankers such as Charles Mitchell of National City Bank and Pierre DuPont led massive waves of speculation fueled by easy credit and misleading advertising, pushing the market to its peak in October 1929 before it suddenly collapsed. Millions of Americans lost their savings, thousands of companies went bankrupt, and countries such as Germany, Britain, and France fell into deep recession due to their financial ties to the United States. President Franklin D. Roosevelt intervened with his New Deal program and established the Securities and Exchange Commission to regulate the system. Yet despite these reforms, Wall Street learned how to reorganize itself and return even stronger. After World War II, supported by the Marshall Plan and the Bretton Woods Agreement of 1944 that linked the dollar to gold, New York became the center of the global financial system, replacing London. The Federal Reserve and major banks such as J.P. Morgan Chase and Standard Chartered played key roles in financing Europe and Japan. In the 1970s, when President Richard Nixon ended the gold standard, the world entered an era of unlimited fiat money, and financial speculation flourished. Institutions such as Goldman Sachs, Morgan Stanley, and Lehman Brothers rose as dominant players in global markets. In the 1990s, Federal Reserve Chairman Alan Greenspan promoted low interest rates that fueled the dot-com bubble, leading companies like Amazon, Microsoft, and Google to soar in stock markets before the bubble burst in 2000, wiping out hundreds of billions of dollars. The system did not stop there, but moved into a more dangerous phase, driven by complex mortgage securities created by banks such as Citigroup, Bear Stearns, and Lehman Brothers. When this bubble burst in 2008, it triggered a global crisis that struck Spain, Greece, and Iceland, and caused massive unemployment in the United States and Europe. Despite being responsible for the collapse, these institutions were rescued with taxpayers' money through government programs approved by officials such as Henry Paulson and Timothy Geithner, reinforcing public belief that the system protects the powerful. In the modern era, power is no longer concentrated only in banks, but has shifted to asset management giants such as BlackRock under Larry Fink, Vanguard, and State Street, which collectively manage assets exceeding the economies of entire nations like Brazil or Canada. By holding major stakes in technology, energy, defense, and media companies, they exert enormous influence over government policies in Washington, Brussels, Tokyo, and Beijing. There is no secret government ruling the world from a dark room, but there are complex networks of interests connecting politicians and financiers, such as the relationship between Wall Street and the U.S. Treasury, between European banks and the European Central Bank in Frankfurt, and between Chinese investment funds and the government in Beijing. These networks influence wars, sanctions, energy prices, and currencies, as seen in the Russia-Ukraine crisis, sanctions on Iran, and the collapse of the Turkish lira and Argentine peso. Ordinary citizens in Cairo, Algiers, Paris, or Mexico City may never see Wall Street, yet they feel its decisions in the prices of bread, fuel, and currencies. Stock indices like the Dow Jones and Nasdaq may reach record highs while inflation rises across Africa and Latin America. Companies like Apple, Tesla, and Nvidia may post historic profits while millions struggle to afford housing, because the market does not measure social stability but investor expectations. With the spread of algorithmic trading and artificial intelligence, firms such as Renaissance Technologies, founded by Jim Simons, Jane Street, and Two Sigma, now control billions through algorithms that make decisions in fractions of a second, without regard for human or environmental consequences. A small technical failure can trigger sudden crashes, as happened during the flash crash of 2010. Today, Wall Street is no longer just a street or a stock exchange, but a global network stretching from New York to London, Hong Kong, Singapore, and Dubai, relying on undersea cables, satellites, and massive data centers. It is a gigantic machine that operates without emotion, memory, or conscience, reflecting human nature when money is given absolute power. It is neither inherently evil nor innocent, but a mirror of human ambition, fear, and greed. In the end, the question remains suspended in the air. Will the global economy remain captive to indices like the Dow Jones and Standard & Poor's, or will societies one day succeed in building a system that balances profit with justice, markets with humanity, and power with responsibility?